For the next session, we will listen to the information update on the topic of From Resiliency to Recovery and Beyond, Central Bank Policies for an Uncertain World by Dr. Sethaput, Suthiwartnarueput, Governor of the Bank of Thailand.
Distinguished participants, it's a great pleasure and a privilege for me to be here today to address the 15th Thailand Focus. And let me thank the Stock Exchange of Thailand for inviting me to give my remarks today. I'd like to cover three areas today. First, I'd like to share with you my thoughts about the economic outlook for Thailand. Secondly, talk about what we at the Bank of Thailand have been doing to respond to this crisis. And thirdly, to share with you a bit about what we're likely to do going forward. So first, on the economic outlook. I think it's very fair to say that Thailand has been hit very hard by the COVID crisis, harder than a lot of our neighboring countries. And as a result, our economic recovery is likely to be slow and lag that of the region. There are a couple of reasons for this. First and foremost is the fact that Thailand as an economy, certainly as a share of GDP, relies very heavily on tourism. Tourism accounts for about 11 to 12% of our GDP, and that's 2 to 3 times higher as a share of GDP than what it is in the other neighboring countries. And tourism, as we all know, is one of the sectors that's likely to recover much slower than other sectors. And this will be a drag on the extent and the speed of our recovery. The second thing is that our vaccine rollout has admittedly and unfortunately been slower than that of the region. If you look again at the share of the population that's received 2 doses of vaccines in Thailand, it currently stands at about 7% of the population. And again, that's lags that of other countries in the region, countries like Malaysia, Indonesia, Philippines. The fact that we've been hit hard again by this third wave with the subsequent lockdown that's come in place indicates to us that the recovery is likely to be bumpy going forward as well, and that the likelihood of trying to achieve a large share of the population that's vaccinated will take some time. The second feature of the recovery is that it's likely also to be highly uneven. If you look now at what's been happening in Thailand, we see what most analysts have been calling a K-shaped recovery. Certain sectors are doing very well. If you look, for example, our export sectors, those sectors have recovered basically back to where they were prior to the crisis, and are producing and exporting at levels before what they saw ahead of the crisis, before the crisis. But other sectors, notably the service sectors in general, and those that cater specifically to tourism, have been lagging. And certain sectors, as we well know, things like hotels and restaurants are lagging very significantly and experience a great degree of hardship. The reason that this has hit the economy particularly hard is that tourism, aside from accounting for that large chunk of GDP that I mentioned earlier, accounts for an even larger share of employment. Tourism, both directly and indirectly, accounts for roughly about 20% of total employment in Thailand. So the employment and income hit to our economy as a result of COVID has been very, very high as a result. And that is, again, another factor that will characterize both the slower recovery and the likely uneven nature of the recovery going forward. But while we've been hit hard, I think one thing that we can say also is that the economy has proven to be quite resilient. And that if we look ahead, again, Thailand is an economy where despite the big shocks have been hitting us as a result of COVID, the downside risks to the economy remain quite limited. And that's the result of our low vulnerabilities in a lot of critical areas. We look, for example, first off, at our external position. Thailand is an economy which has very low external vulnerability. We're very resilient to balance of payments type shocks. And why is that? Largely, again, it has to do with the fact that we have a very low level of external debt and a relatively high amount of foreign reserves, certainly relative to our external debt. So for example, recently we've seen a weakening of the baht, and the baht has weakened by about 10% year to date, and that's outpaced what other countries in the region have experienced in terms of the current weakening of the currency. The resiliency of the Thai economy, the strength of the Thai economy in the external front, I think remains very solidly intact. I think there are a couple of reasons that have underpinned the fact that the baht has weakened, but these have to do again with the fact that the current account, which traditionally has been in surplus, this year has swung into a deficit, as a result of the contraction in tourism. But again, the size of the current account deficit, certainly relative to the amount of international reserves that we have, is not that worrisome. If you look, for example, this year, we see that on the current account side, we year to date are seeing a current account deficit of something on the order of about $9 billion US dollars today. If you add on top of that the portfolio flows, what we've seen is year to date again flows out of the equity markets on the order of about 3.2 billion US dollars. But at the same time, we've seen inflows coming to the bond markets of 2.2 billion. So on net, on the portfolio side, we see outflows of about $1 billion. Add on top of that the current account deficit of 9 billion. You're talking about year to date roughly outflows from that side of about 10 billion. But if you compare that again with our net foreign international reserve positions of 280 billion, it's something again that I think shows that our external vulnerability on that front is extremely low, and that our stability on the external front certainly remains intact. Another example of our resiliency on the external front is our low vulnerability to the possibility of another taper tantrum or a yield spike. A yield spike in global financial markets is not likely to have a high impact in Thailand for a couple of reasons. First, in terms of the transmission of a global yield spike into a yield spike in the domestic market in Thailand, Thailand's bond markets rely less on non-resident financing than what we see in other countries. So the transmission from a global spike to a local spike is not likely to be as marked or as sharp as one might see in other countries. But even if there were to be a local yield spike as a result, the transmission into the real economy is also likely to be muted. Why? First off, if we look, 90% of financing, private financing in Thailand is still bank-based. So only about 10%, and basically it's mostly the larger corporates, which this time around are quite solid. Most of the impact or burden of a local bond yield spike wouldn't have that much impact to the banks as a result of a possible global taper tantrum. And also the banks themselves are not likely to be hit that hard by a yield spike because, again, in Thailand, close to 97% of the banks finance themselves by deposits, not through wholesale, through the wholesale markets. So all that, I think, indicates again that Thailand is an economy that is likely to be quite resilient, much more resilient to the possibility of a taper tantrum than in many other countries. The second factor that I would point to that indicates our resilience has to do with our banking sector. Our banking sector remains sound. Capital ratios are quite high, 20% BIS ratios overall, and liquidity also remains quite high. Provisioning levels are also high relative to NPLs. So the banking sector remains highly liquid and very strong by most measures. And we've seen, very fortunately, that the banking sector has continued to function throughout the crisis, extending credit. We've seen credit growth grow in most areas, with one notable exception, which I'll discuss later. indicating that the banking sector, as we would like to see in this kind of crisis, is acting as a shock absorber and not a shock amplifier. The third area of resiliency that we see is on the public finance front. Our public finances remain sound, even though public debt to GDP ratios have come up during the crisis, as they have in all countries. But overall in Thailand, public debt to GDP ratios remain quite reasonable. We stand at about in the high 50s right now as a share of GDP, and indicates that the government has room available to engage in additional fiscal stimulus if it deems that it is necessary to do so. Other indicators, if you look at the ability of the country and the government to engage in more fiscal firepower, include the fact that if you look at 10-year borrowing rates on government debt right now, still remains quite low. The government now is able to borrow 10-year money at less than 1.7%. That's a much lower borrowing cost than we see in other countries in the region, and again reflects the fact that public finances are perceived to be sound, risk on that front relatively low, and liquidity quite high. And again, given the fact that our external vulnerability remains low, even if the additional borrowing by the government contributes to an increase in the current account deficit, again, given the overall strength of the foreign reserve picture in Thailand, I think the risk on the external front and the implications of additional public sector borrowing, if it is deemed to be necessary, remain quite low and quite limited. So all that indicates, I think, again, that even though we've been hit hard and harder than other countries, and that our recovery is likely to take longer and perhaps be more uneven than we see in other countries, the resiliency economy is there, it's intact, and the downside risk of seeing like a sharp, a decline in terms of weaknesses stemming from weaknesses on the balance of payments front, on the banking front, or on the public finance front remain quite limited. So let me turn now to a second part of my remarks that I would like to share with you today, which is what we at the Bank of Thailand have been doing. And if I had to summarize or very briefly or shortly, I would say that the Bank of Thailand, we have taken, I think, what is a flexible and pragmatic approach to addressing the crisis. We are willing to do, have been willing to do, and continue and remain willing to do what it takes to get us out of this crisis. And the statement that we've been using internally is to say that all reasonable policy options are on the table. So what does that entail, and what has been part of our policy response to this unmitigated crisis that we face now? First and foremost, and very importantly, we've tried to ensure that financial conditions remain accommodative to support and facilitate the recovery. So we took early preemptive action, lowering policy rates until policy rates now stand at 0.5%, which is as low as they've ever been in Thailand, and lower than in many other countries in the region, to try to ensure that, again, that financial conditions aren't a constraint on the recovery. We've also taken steps to ensure that liquidity, aggregate liquidity in the system remains ample, and again, also is not a constraint to the economic recovery. However, while aggregate liquidity remains ample, and if you look at all the usual liquidity indicators that we would take a look at, liquidity coverage ratios at banks and whatnot, which would indicate adequate liquidity in the system, the low bond yields and whatnot, what we do see is that while the banking system has undertaken its shock absorber function and continue to extend credit to many sectors of the economy, we've seen credit growth, for example, remain positive for the large corporates. It's growing at about roughly ballpark about 4% year on year in the latest figures, and also continued credit growth extended to the retail or household sector. The area where we haven't seen as much credit growth as we would like is with the SME sectors. And again, that reflects increased perceptions of risk associated with the SME sectors, which have made banks reluctant to lend to the SMEs, despite again liquidity in aggregate being quite ample. So again, in terms of a policy response, I think we've taken a fairly flexible and pragmatic approach to this, and tried to address the real constraints to credit growth to SMEs, and address the problem and issue of high perceived risk among SMEs by introducing a credit guarantee facility to accompany our lending facility to banks, to try to encourage banks to on-lend onto SMEs. We had in place initially what was called a soft loan facility, which was directed again to SMEs. We found that over time that facility was not being tapped as well as it should, and basically, put it blunt, as an analogy, the pipes were getting clogged. Again, I think we showed that we responded flexibly and pragmatically to the crisis. So what we did was then we undertook and issued a new emergency decree to put in place a new lending facility, a new SME credit guarantee facility with accompanying credit facility for banks to try to on-lend to these SMEs. And we're happy to say that we've seen good progress on that. We initially set a target that we wanted to see 100 billion baht extended through that facility in 6 months, and we're well on our way to achieving that target. And the latest figures stand at about 89 billion baht in credit going out through that facility after about 4 odd months. That again, I think, is an example of the kind of pragmatic and approach, focus, and implementation that we at the Bank of Thailand have been willing to play. Another example of our flexible and pragmatic approach, and an indication perhaps of our willingness to step outside our usual comfort zone as a central bank, is by introducing this other scheme in addition to the SME credit guarantee facility, which was an asset warehousing scheme. We recognized quite early on that certain sectors require a fairly targeted response in terms of their approach to debt restructuring. Certain sectors, like those that are hard hit by the tourism slowdown, not in a position to engage in what might we call usual debt restructuring, because with no tourists, a lot of them don't have any cash flow at all. So a more appropriate solution for them would be for them to be able to park their assets, to use that to basically pay down their debt, and then with the option again to be able to repurchase those assets back at a later date, in order to try to minimize the debt burdens that they would incur otherwise if they still had to hold on to the asset and the loans. So I think those provide you with some examples, some concrete illustrations of how we at the Bank of Thailand have tried to respond flexibly and pragmatically to the changing circumstances of the COVID crisis. Let me now turn on to the third part of my remarks today, which is what next? One thing that I'd like to see, is a move from short-term blanket temporary measures like a debt moratorium to longer-term, more lasting, more targeted solutions like debt restructuring. Moratoria, I think, are a good response to something that is short, something that is severe, and something that is broad. But as we have seen in discussing the economic outlook, this crisis is likely to be long for us, the recovery likely to be very uneven for us, and it therefore requires a longer term and more targeted approach. So we'd like to encourage that we move from a solution of having debt moratoria in response to waves of infection causing a lockdown to, again, more lasting solutions like debt restructuring. So a few days ago, just very recently, we announced a series of initiatives and incentives regulatory incentives to try to encourage banks to undertake this kind of debt restructuring, which we feel is important for a lasting solution to the problems that we're facing. And we would like this debt restructuring to have the following 5 characteristics: to be longer in nature, to be broader, apply to a wider range of people, but at the same time, third, to be more targeted, to be more flexible, and to respond specifically, more appropriately to the very different circumstances faced by different kinds of borrowers. Because as we mentioned, again, nature of recovery is quite uneven, and the crisis has hit different sectors in a very uneven fashion. We would like to make sure that these debt restructuring measures, as much as possible, try to encourage as many people as possible to survive and get through the crisis. The more debtors that survive, again, the better off the creditors will be. And lastly, and most importantly, very importantly, we would like to make sure that the debt restructuring measures that are undertaken do not do so in a way that undermines in any way, shape, or form or exacerbates problems with moral hazard, creating adverse incentives, moral hazard problems as a way of or undertaking measures in trying to alleviate the crisis, but which end up contributing to moral hazard would as the saying goes, the cure will be worse than the disease, and that's something again that we would be very cognizant of in implementing these new measures. So, what about the longer term? At the same time, and making sure, in addition to making sure that we get through this crisis, we at the Bank of Thailand are trying to make sure that we put in place the foundations for our longer lasting recovery beyond COVID, and making sure that we are in a place that's that we're well positioned to take advantage of the opportunities that will arise in a post-COVID world. Now, there are a lot of uncertainties in the world. It's difficult to see what's likely to happen or play out going forward in the future, but I think there are 2 things at least that we can comfortably say that will characterize the post-COVID world. We're likely to see the post-COVID world be greener than before, and also be more digital than before. So with those 2 things in mind, we at the Bank of Thailand are making sure that at least from our side and the financial sector side, that Thailand is better positioned to take advantage of these opportunities in a greener and more digital world. So what kinds of things are we doing? I think first on green, I think as with many people, I think the IPCC report that came out last week was a wake-up call, a very loud one, sobering read, and I think highlights the need for much more effective and much more rapid action. That sense of urgency that we've been talking about for a long time actually needs to translate, I think, into much more concrete actions. On the global front, I am addressing, I'm cognizant that I'm addressing many people on the buy side, and I salute, welcome a lot of the very encouraging initiatives that happen on the global front. The net zero initiative among asset managers, I think, is a very good example of the kinds of things that needs to happen, both in terms of the scale and in terms of the extent of the involvement. And I think is a good example, again, of the kinds of things that need to happen here in Thailand. Thailand, I would argue, unfortunately, I think we have been lagging a bit in our response in terms of the climate crisis, and as a country that is likely to be hit very hard by the climate crisis. We're a country, again, that is, in terms of population and employment, quite significantly dependent on agriculture. About 30% of our labor force is tied to agriculture. So obviously, higher temperatures and that higher risk of drought and floods will hit the agriculture sector very high. We're a country, again, highly dependent on tourism. A lot of that is beach tourism, so any kind of substantial rise in sea levels and whatnot will hit our country very hard. So as a country that is very vulnerable to climate change, I think it is beholden upon us to take a much stronger initiative on the climate change front, on the green front. And on this, I welcome, again, a lot of the initiatives that happen in Thailand, especially in the capital markets. We've seen the Stock Exchange of Thailand initiate a welcome project on coming up with a Thailand Sustainability Index, trying to identify sustainable firms that are listed. We've seen our colleagues at the Securities Exchange Commission undertake welcome initiatives with ESG bonds, which have seen significant growth in Thailand as well. And I'd have to say that I'd like to see that progress on the banking side catches up to the welcome initiatives on the capital market side. I think it's fair to say, both in Thailand and globally, that the banking side has tended to lag, unfortunately, a bit. The green and climate initiatives that have been undertaken by capital market participants. So we at the Bank of Thailand will do our level best to try to encourage that to make sure that the banking sector catches up and does play its role as is needed. We launched and will build upon our responsible lending guidelines and practices. And the important next steps for us on the banking side in terms of the green initiative would be to try to improve disclosure, I think, which under any kind of scenario and any kind of initiative remains a critical building block, essential building block to make all the other stuff work. So disclosure, critical element. Aside from that, another very important and critical initiative is the development of a green taxonomy that is consistent across the financial sector, so that we don't end up working at cross purposes, and that we can leverage upon each other's efforts. And on this, I'm happy to say that Bank of Thailand has been working very closely with our colleagues at the Securities Exchange Commission, with the colleagues at the Office of the Insurance Commission, with the colleagues at the Stock Exchange of Thailand, and also with our colleagues at the Ministry of Finance to try to develop a consistent taxonomy in green that extends across the financial sector in Thailand. And also, we hope eventually that this will be a taxonomy that is consistent and aligned with across the region as well, within the ASEAN region. And I think this is particularly important because the climate challenge, I think in many ways, will be won or lost here in this region, in Asia. I think we've seen, while everybody has a lot to do, we've seen, I think, clear initiatives being taken in Europe, which, and obviously more needs to be done both in Europe and the United States and whatnot. But given where we are in our cycle of development and whatnot, a lot of the bulk of the climate challenge is going to take place here in Asia, not particularly within ASEAN itself, but also within broader Asia. So I think what happens here is important and will be relevant in affecting how successfully we respond, we collectively, globally, respond to the climate challenge. The second trend that we see that is very important and that we have to make sure that we are well positioned for is digital. And on this, I'm happy to report that we have made good progress, better progress, I think, than we have made on the green or climate front. And I think the Bank of Thailand, in particular, has been, I think, actively engaged all throughout. And I think not far. We haven't been behind the curve, to put it frankly, on this. I think we've demonstrated that in terms of outcomes, things that we've done, we haven't lagged others in this very, very important and increasingly important area to come. So putting in place the kind of digital infrastructure that we need to allow the kind of digital financial services that are likely to become more and more important in the future. That's been something that for us is top of mind and remains one of our key strategic priorities. So what have we done in this area? First off, I think in terms of, if we look at in the area of digital payments, we were among, I think, the first countries to induce a standardized QR code to assist with payments. And we've seen a very, very good uptake on that. QR codes now in Thailand are in very, very broad use. And I'm happy to see that it's really helped to improve access and inclusion very broadly. We've seen, for example, even vendors use QR codes for payment purposes, and I think that's been a welcome development to try to address our longstanding issues in terms of trying to improve inclusion on the financial front. Aside from QR codes, we've made very, very good progress in terms of prompt pay, which is our electronic payments. And we've seen a very, very high uptake and usage of prompt pay, especially during the COVID crisis. And we've seen the number of transactions per person per year increase and reach an all-time high. We've extended this payments framework to cross-border as well. So we now have in place cross-border QR using cross-border payments using QR with our neighbors. Put in place many of our neighbors, and in Cambodia, and Vietnam, and also as far as Japan. And most recently, we have connected our fast payment system, Prompt Pay, with that of Singapore Pay Now, which was the first globally, the first fast payment linkage cross-border, and we've seen transactions on that, a very satisfactory uptake on that front as well. And as another indication, I think, of the opportunities in this area for us as a country, building upon this digital infrastructure that we put in place, we've seen a very rapid rise and usage of mobile banking applications in Thailand. Thai people love their mobile phones, and we've seen Thailand ranked #1 globally in terms of usage of mobile banking applications for 3 years in a row. And I think, again, this is an example of the kind of opportunities that I think that may arise and that will come about as a result of putting in place the right kind of digital infrastructure to enable these things to happen. Aside from the initiatives I mentioned on the digital front, another important initiative that we are undertaking and have been undertaking and continue to undertake is that on CBDC, or central bank digital currency. We started off with wholesale CBDC, doing a pilot program with some of the corporates, undertaking a cross-border CBDC program, pilot program with the Hong Kong Monetary Authority, which has been extended to include now the People's Bank of China and the UAE, along with the involvement of the BIS. And in terms of the next phase of what we're looking forward to on the CBDC front is to undertake a retail CBDC pilot program. And we think that this will be an important program for us to try to address our longstanding pain points in the financial sector, especially with regards to efficiency, high fees in certain areas and whatnot, and even more importantly, in the areas of access and inclusion. So I think, again, with that, I think our initiatives on the green and digital front are an example of the kinds of things that we are doing, not just to, again, address the immediate problems facing us, getting out of the crisis, but also looking ahead, trying to put in place and laying the foundations for Thailand, the financial sector, and for Thailand to be well positioned to grow in the years following the crisis in the post-COVID landscape. We think that it's very important to put in place, laying the groundwork and the foundation, which will facilitate new things to appear. And it's those things, those new initiatives that will come about as a result of this new digital infrastructure that we put in place and the new opportunities provided by green, which I think will propel Thailand in its next phase of growth after the COVID crisis. Thank you very much.